Hi, my name is Kevin Retcher, owner of First Meridian Mortgage. If I told you you were going to get a divorce, would you get married? It's an interesting thought, right? So, the marriage analogy, let's think about it for a second. A lot of realtors out there and loan officers are using the slogan, marry the house and date the rate. First and foremost, I would probably run and find a new loan officer or a new agent if they were using that as a sales pitch for you to buy a home. If in real life you were married, you can't just go out and date someone else unless you get a divorce first. It's the same with your mortgage. If you want to date a new rate, you actually have to divorce your old loan. And just like in real life, divorces aren't always easy. They're not always cheap. They're not always guaranteed to work out in your favor. So before you commit to a home with the hope you're just dating and you'll get a better rate later, make sure you're prepared for what it really takes to make that switch. And if your loan officer or your agent isn't explaining that to you, maybe it's time to divorce them too. You can't date a new rate if you're already married to your current mortgage, unless you go through the process of getting a divorce, of a refinance, which basically is a financial divorce from your old loan. Here's a couple things that are happening out there. There are loan officers and agents talking to people about doing 2-1 buy downs. And that's where an interest rate is bought down 2% from an actual note rate, let's say 7. So they may start at 5 for 1 year, go to 6 and go to 7. They're telling people that they can refinance within that 2-year time frame, that interest rates will go down and they won't have a problem affording the new home. Here's the thing, that note rate is actually 7%, and that buy down is actually paying the lender 7%. Even when you're paying 5, lender's getting their 7. 2% is put into escrow so that 1/12 of that can be paid monthly on your behalf. And then the second year at 6%, 1% is put into escrow. So 1/12 is paid to the lender each month, and they get their 7% the entire time. So it is essentially an arm that's going to adjust automatically. At least with an arm, you have a chance that the rate could go down if the market actually went down. But on a 2-1 buy down, you're going to pay that higher amount. I've done a video on 2-1 buy downs. I do not typically do them. I do not believe in them. Okay. The other part of this equation is the financial cost of doing a refinance. If the market would happen to decrease and values weren't there, if someone lost a job, there's a number of factors that could go into someone not being able to refinance and take advantage of lower rates in some instances. So there is a risk there. But if you are going to marry the house and you are thinking that you're going to divorce your current loan, right? You should do it with a no closing cost refinance. I have mastered doing no cost refis since 1996. A no cost refi is essentially when if you have a higher rate, let's say you start at 7 and a no cost refi is at 6.5. If you paid closing costs, you might be able to get 6.25. You don't want to pay $5,000 to get 6.25. You should take the 6.5 that's at no cost. Save the money that you can and don't incur more closing costs. Okay. And then if the rates drop even further, you divorce again and do another no cost refi. Always use the bank's money, taking a slightly higher rate than what the market is. Market might be here. Take the rate right above it. Do the no cost refi. You want a free divorce. You don't want to pay for a divorce. It's like getting married. If you did 5 refinances and paid closing costs every time, that would be like paying for 5 divorces. And nobody wants to do that, correct? I mean, that's silly. So do a no cost refi, and then each of those divorces are free, lowering your interest rate when you have the opportunity. But here's the thing, you should not be buying the house with the thought I'm marrying the house and dating the rate, because the rate is just what it is. Don't let someone use it as a sales pitch. Buy a house that you can afford. You're not going to be divorcing your house, okay? You're going to be divorcing your mortgage, okay? Please do not let anyone use that slogan on you. Marry the house and date the rate. It's just not right. It's marry the house and be willing to divorce your rate, but you better be able to afford the marriage that you're getting into. My name is Kevin Retcher, owner of First Meridian Mortgage. Like, share, and subscribe. I'll talk to you soon.